and start the new year in a very amazing way. Okay. Now, this system or this strategy, like I said, is proven. And I can tell you, at least guaranteed 95% accuracy. But then there are three things, like I said yesterday, that are very important when it comes to trading. Okay. First is the strategy, which you're going to be using. Now, in that part, Manara got you covered. I mean, you don't have to think about that. You don't have to worry about it. Okay. Second thing is the psychology, which is the psychology of the trader. So how you reason, how you think. Sometimes a lot of people are so used to betting and gambling that they use the same attitude or they use the same style in trading. Now, how do you know if you're gambling or when you're gambling? When you enter a trade and you enter a trade without a proper plan, you enter a trade with higher lot sizes, you enter a trade without even knowing anything about risk size or risk management. I mean, you have $100 and then you're seeing I see some people with $100 using 0.1. And some will even use that in multiple positions. And so you can imagine. So all these things are based on the fact that what if this wins? I'm going to be making a lot of money. Oh, how much will I make if I put in so much lot sizes? Now, when you start thinking that way, that is gambling or gambler's mindset. You understand? Now, trading is not that way. Then also, some people have this attitude of I must trade every day, but I must trade every day. That so long that the day comes in, okay, all right, I must trade. You understand? Now that psychology also is not a good thing because trading is not like a daily meal. It's not like your food. It's not like water you drink every now and then. Trading is something that you do when you see the opportunity that matches your strategy when the market is okay. Okay. So there are a lot of things I would say about psychology, but not today, not tonight. Sorry. And I think I made a video on that. There's a video on psychology entirely where I talk about trader psychology. So if you see that, you can watch it, or you can watch any video on YouTube that's doing psychology. But just know that another pillar that helps you to be successful in trading is the psychology, trader psychology. Then the last but not the least is your trading plan, having a trading plan. Now, having a trading plan, simply talking about like embodiment of your total, how you want your day to end, how you want your week to end, how you want to end your 1 month in the trading journey. You understand? What you see yourself becoming, what you want to really achieve, breaking it down in bits and being realistic. Now, the word being realistic is very important. When you are planning like your day plan, like for example, let's say you have $1,000. Now, the first thing you want to ask yourself is you don't plan, okay, let me just do this. So you don't plan your day based on the market or based on the profit you make. You plan your day based on the fund you have and the goal you have for it. So, for example, if I have a $1,000, if I have $1,000, I should be looking at myself, okay, what do I want to achieve with this $1,000 in the next 30 days? And that is where the compounding plan comes in, or there are other plans you can think of. There are different plans. There are daily withdrawal plans. Maybe you have a goal of at least I want to be withdrawing a minimum of $50 every day. I want to be paying myself $100 every day. Okay, I want to achieve, maybe I have a project I want to do in the next 30 days, and I will just break it in bits and make sure that I raise my account by 5% every day. These things are very important. And when you have such plan, stick to them. You should be married to your plan because your plan is married to your dreams, and your dream is the reason why you come in. Don't be married to the market. Market is not a good place for you. Market is not a safe place for you. The market does not even like you in the first place. Market is like an enemy ground. Market is like you are a soldier of a particular country going to another country to fight a war, and you're there winning the war. And after winning some war, or maybe after killing some soldiers or something like that, you still stay in that enemy ground thinking you are safe. No, you're not. You do whatever you want to do, and you're out. Just like when you those, if you watch American movies, when they talk about extraction team, those that will just go to extract a particular, maybe a target. They just want to go and bring out someone, help someone to get out of such a particular zone. They do it quickly, like they call it in and out. Like you don't stay. Don't. In fact, if I were you, not just if I were you, I think that is how you're supposed to be. What it should be is anytime you're in the market, you should not even be able to rest. You should be watching your back. Market is not for you. It's not really designed to hold you. It's not your home. It's not a relaxation place. It's a place you should. I mean, look at it. It's a big market. You're going there to take from the market. The market doesn't want you to take from it. The market wants to take from you. That's the truth. Your broker, the market, everything that's to do with trading wants to take your money. So you don't feel comfortable in such a place. So when you have a trading plan, you focus on that plan. The moment you hit your target, get out of the market and be gone for that day. Don't be tempted. Even if people post results throughout the day, I mean, fine for them. Maybe they have their goal and their target, but you've done with yours. So like that will help you to achieve your long-term goal. Trading is not a one, it's not a get rich quick scheme. Actually, trading is actually a learning journey, a learning journey. So all these things, when you put these three things together, number one, having a good strategy, number two, having a sound psychology, and number three, having a trading plan. I tell you, you can be making $10 every day, but you'll be more successful at the end of the month than somebody who is posting $1,000 today, $500 tomorrow. Then the next day after that, they won't be able to post because they've lost $1,500. You get my point? So when you put that together, I tell you, you'll be successful. Now, talking about being successful, guys. Talking about being successful. Um, um, okay, I believe my co-host to do their job, right? Have I even done that? I think I've made you guys okay. I have two co-hosts, right? I don't need to have, maybe I should have 10 co-hosts to manage this small group. Just joking. All right, guys. So talking about that, we need to change our orientation. Now, I want to give you this hint. Why are you here? Why are you in economy? Why are you here? Why are you in this academy? Why are you here? Actually, the only reason why you are here is because this place is a place to offer you a vehicle to get to where you're going. Now, there are two types of people here right now, or I would say three types. Let me just say two types here. Now, the first group of people should be those probably uh, who have been in trading before, like know their onions when it comes to forex trading. Like myself, I'm a forex trader, right? And I know there are a lot of people too on this group, or probably that are even are not here on this call right now. They are on the group who are already forex traders. They know how to trade. I mean, that's yes. Now you'll be asking yourself, why are they here? Okay, but then before I tell you why they are here, let's talk about the second group. The second type of people are people who are totally new to forex trading. Okay, now these guys that are new also are here. If you're asking why are they here, well, that is even obvious already. Now let's start with the forex traders. Why are they here? I mean, why would someone who knows how to trade forex still be here on the academy using these tools? Well, by saying somebody who can run fast, why is he using a vehicle? Why is he using a car? Why is he even flying a plane? I mean, if you can run fast already, because if I say, guys, I want to line you all up, and then I have some of you that are good athletes, they can run 400-meter race, whatever race, and all that. Even let's talk about Usain Bolt. I mean, this guy is the fastest thing on earth, talking about a human being on earth. I mean, if he can run that fast, why is he having a car? Why does he need a car? If you can drive a car, why do you need a jet? Why do you need an airplane? You know, this is called leverage. It is called leverage. Yes, I can run fast. I can run the distance. I'm strong and all that. But if I can get something to make me spend lesser time and lesser energy, lesser effort to achieve more, why shouldn't I do it? Now, for we forex traders, for me, I know, and I'm speaking on behalf of many forex traders, apart from people who gambles. I mean, people who are really forex traders who know their onions, if they are here tonight on this call, they will agree with me that it takes time for us to we do the analysis, we wait for sessions. After doing all of this, we do our chatting, we look for our zones. First, we check the direction, we know the direction, then we check the zones. When we check the zones, then we check our look for out for our setups. When we see our setups, then we break it down and find our entries. And after that, entries and exits, then we now wait for the market to come to that zone. That's how a good forex trader should trade, not somebody who just jumped to the market, just must any support and resistance they trade. No, I'm talking about people who know what they are doing. Now, all these processes I just mentioned to you take hours sometimes. Sometimes you don't even get a good setup for the day. It's really tiring actually, but it's fun because you know that this is something that you learn and now you are practicing it. It's fun, but it takes a lot of time. Sometimes you don't sleep. Like for me, I do my setup from 12 a.m. I start checking out and I put everything in place. So by sometimes I like to trade London and US session. Now imagine something I want to do in the morning, I start putting a set up in the middle of the night. Now all this time. So imagine I have a software, I have a system, I have an AI robot that will just give me all the setups without me even looking for it. All the setups will be there. Now I can now myself apply my experience as a forex trader to now fine tune and then put in some rules to help me increase my winning accuracy. That's all I'll need to do. I'll be tired. I'll have so much setup. So that's the benefit for a forex trader. Now, someone who is not a forex trader, the new ones, I mean, instead of you spending all those years to learn forex, then also after learning, you have to blow a lot of accounts. And that's the thing, that's the journey. That's how to go forward in forex trading. Actually, you have to blow a lot of accounts. You have to stay patient. You have to develop your own strategy. You have to take it for a very long number of times to have the belief in it. All this put together can be shortcut into a very small 1 month thing by just coming to the academy and using the tools. Because when you use the tools and I use the tools, at the end of the day, results will be almost the same. I mean, you won't be seeing the results who is more experienced or not because we're all using the same tools, isn't it? Now, some of you be wondering if this is what it is, why are we not making it? Why some of, I mean, why most of us are not doing it? Most of us are not making it. The thing is, we as human beings, most times we don't follow the rules. For those of you who are probably who are already driving, if you remember when you probably when you went for your driver's license, for those of you who actually went to get it the right way, there are some questions you have to answer. If you're a first timer, there are some questions you have to answer. And those questions are related to rules and, the guidelines or rules and all that of driving on the road. Most people always fail it. Most people always fail those rules. Now, but because of the way things are sometimes, despite failing those rules, some still go ahead to start driving. But you see, the problem is the disaster when it happens. You get the point. So in the same way, when you have the tools and you still don't know the rules, you don't know how, you don't know which to use and when to use, and it won't be effective for you. No matter how beautiful your car is, if you don't start it and move it, it will not move. Even the latest electric car, or not even that, the self-driving cars you still have to what to remote it yourself. You have to put it on with your phone. So someone needs to apply a force before things will happen or anything will be in motion. So if you don't know how to do this or you are not doing it, nothing will move. So nothing works except you walk, isn't it? So you need to, and before you can walk, you need to understand. So that is why we are here tonight. So tonight, I'm going to be showing you the strategy on Manara that will help you to achieve a daily target that will in turn turn to a weekly target that will in turn give you your monthly target and eventually give you your dreams. If only you follow the rules and you do it exactly, I'm going to be showing you tonight. So you have to pay very rapt attention, have your pen and a paper. You may have to jot some things. Well, I mean, you know what's good for you. Just do whatever it is that will make you understand everything I'm going to be teaching you and you practice. And I tell you, in the next 30 days, you'll be so happy that even in your dream, you'll be talking to people about this economy. I mean, you just see that you sleep, you just see yourself in the dreamland talking about this academy, and you wake up, you see those people coming to meet you at home that, hey, guy, you didn't allow me to sleep. I saw you in my dreams. I mean, that's how good it can be if you really follow up tonight. So let me go into it. I'm going to be sharing my screen right away. And before I do, so like I said from the beginning, if you are new, because we're using Manara, right? So I may not be going into the details of Manara. I will just go straight to the business of the day. So what are we going to do tonight? I will start by showing you this strategy, and I'll show you some few examples, which we call back testing, to show you that this actually works. I will show you the result, the trade ideas that these settings have given in the past, like few days ago, and because of time, probably what I would have loved to do is to show you week by week, because when I did the back testing, when we did the back testing, we did it for last week, upper week, and I even checked it as far as last month. So which means even if you check it for 3 months ago, that's how to know something that is consistent, because one day is not enough to prove that the strategy is consistent. 2 days can be coincident. Okay, the third day, well, that's where you start thinking about consistency. But this, I'm talking about the strategy that works every day for a whole week, for a week before that, for the one even before that, that means it's confirmed, right? Which means in the next future is going to be very close or even better, isn't it? So I'm going to show you that, but I'll wrap it up in a charts which have been designed by one of our powerful leader here. I mean, this guy has been, he's going to come up. I hope he's online already. I think he's here, he's here. So I think on that side, I will ask him to share his screen if he's around, or maybe I'll just share it with you guys here because I asked him to put it in data and send to me. So send to me, and so I'll be sharing with you guys. And so that will make it faster instead of showing you day by day. Okay. So to show you all the past results and all that. And then lastly, of course, we'll talk about the rules of engagement. And lastly, I will now tell you about compounding system and how to use this system, how to use this strategy to help your compounding plan in the next 30 days, and then the next 60 days, and the next 90 days. And you know what that means? That's from this year to the end of the, sorry, from now to the end of this year, and then the new year to the first quarter of the next year. I mean, you can, that's what I'm talking about. You know, that's all we need now, right? So, and if you understand this very right, I tell you, it's going to help a lot of people because, you know, it's the end of the year. A lot of people are already emotional. They are talking about what they want to achieve, their goals and all those stuff. New Year resolution, isn't it? I mean, you don't need a new resolution. You only need a new strategy. You need a new habit. You need a new way of thinking. You need a new way of seeing things, perspective, your paradigm. All those things are what you need to change, isn't it? So this is something to work with. All right, let me share my screen and I'll take you on this fine journey. So I'll be your captain tonight. I'm going to be flying at the altitude of 35,000, blah, 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 below this, above the sea level. Don't let me give you all those things so I won't mess up. All right, the altitude. All right, so this is Manara. Of course, this is the first place, the chart place. Now, for those who don't know, this place is a very beautiful place. If you're a forex trader, you can use it very well with your strategy, and you can see a lot of what's it called? You see a lot of results. For example, let me show you something. You can, oh, you all know, don't worry, don't let me go into this. So you can use this to trade, okay, to get your setups, take a trade idea and choose a pattern and make money. Or you can also use it for scalping, okay? Now, there are videos on that. You can watch them later. But here is where we want to deal with the monitor. So what's the monitor? The monitor area is actually, the monitor is where you give commands to Manara. So you give some commands to Manara to help you, just like the name monitor, to help you monitor the market. And whenever it sees ideas or setups that fit into your preferences that you're going to be choosing right here, it will arrest them and put them on this list for you. So when you see them on this list, you take them. And when you take them, you make money. You see how it goes, right? So now, what are these settings? That's where we want to go now. What are these settings? Now, I want you to pay very good attention, very rapt attention, okay? So the settings you're going to be using, let's start from the area. So first of all, these are the features on this part. So we have the monitor. Under the monitor now, we have the settings, we have security, and then I think that's all. And then this is where you save your view is where you save the settings as your name, any favorite name that you want to use. Okay. Now, so already we've already done this before, so I'll just take you straight to it. So when you get to the pattern status, that's the first thing. The pattern status you see here. Okay, you choose mature for this setting, for this particular strategy. You choose mature. Okay. Now, for those of us who already know what these are, so let me just explain, okay? For those of us who are new, sorry. Now, we have incomplete. Incomplete means the ideas that are not at their entries yet. They are still far away from their entries, which means you have enough time to plan yourself and all that, blah, blah, blah. Yeah, that is incomplete. So it's still far away. It's not complete yet. So, I mean, yeah, ideas that are not there yet, right? The next one is the complete. The complete ones are ideas that are not just there. You understand? Completed, they're already moving. It's activated already. It has got into the entry and it has activated already. So you understand? So that's the complete. Now, the last one is the mature. Now, mature are ideas that are just recently completed by 1 to 4 candles away, you know. So when we say 1 to 4 candles away, you understand? Now, either the ones that have just been completed 1 to 4 candles away, or they are about to be completed within the next 1 to 4 candles. Now, the good thing about such is it is a type of idea that gives you time to quickly calculate your risk size, and then you enter market execution because it's around the entry. Because meaning it's still dancing around the entry, it's not far away. So this is the kind of ideas that you choose. And the reason is simple. So you don't have to wait. You just go in there, enter the trade, and then you let it ride. And then while you wait, while you see it TP. And one good thing about this is this strategy, the time frame we choose for them at such time frame that will not take you too long to get to the either TP, of course, or SL. But we don't wish for the SL. But the truth is, there will be SL, of course. So, of course, there will always be SL. SL means losses, apart from winnings, right? So that's the mature. The next thing after that is you choose the time frames. Sorry, under settings still. You come to the time frames. Now, you untick all the time frame except M5 and M15. So the only time frame you need for this strategy is, or they are M5 and M15. Those are the two time frames which you need for this strategy. The next thing is asset class. Now that is a bit, I would say, relative, depending on your account size. But either way, I think to make it easy, I would just recommend directly. If you are new, whether you have a big or small account size, don't bother yourself about bond or commodity. Just focus on forex and metal. Okay, forex and metal. But then also you can include indices if you have at least $1,000 account thereabouts. Yeah. But if not, just focus on forex and metal. Okay, focus on these two. Now the next thing is the pattern. Now this is the main strategy here. Okay. Now when we say strategy, strategy is not just talking about one thing. It's a combination of set a combination of style which you bring together to achieve a particular aim, to have a very profitable setups that gives you high winning rates. Not that you will not lose once in a while. You have high winning rates. There's nothing like no losses in forex trading. There can only be more winnings, less losses, or high winning rates. Okay, I will explain what the meaning of that. I mean the difference between, some of you say, okay, what's the difference between high winning rate or more winning? I will explain this difference later on as we move on. Okay, so but then on the pattern, you only need bats, crab, and gatly. As you can see, those three ones that are ticked in green, that's the bat. You tick the bat, the crab, you tick it, the gatly, you tick the gatly. Now these three are the patterns you're going to be choosing. No capping, that's just it. Now, the last but not the least is the type of direction. So I'll just use that word direction, pattern type. Now, the patterns you want to be trading. Do you want to be trading a bullish pattern? I mean, the pattern that when the market is on its way up, or when the market is on the way down, or also you want to trade on none, or when, even when the market is not really direct, and you don't even have a direction, just going up and down a particular point. Now, you only want to trade what? When the market is up or on its way down. Only those two. Either that or this. So you choose the two. Okay. So when you choose all these ones now, as you can notice, each time I touch any of those things, you see that the list always changes every time I touch anything here. So that is like adjusting to the settings. It's adjusting to my preferences. Okay. So whatever it is that I choose is what Manara we what? We search for, we monitor and list for you. Okay. Now that is that about the settings. So I want you to remember again the mature under the pattern status, M5, M15 under the time frame, asset class, forex and metal, pattern, bat, crab, and gatly, and the bullish, bearish under the pattern type. This is what you need to do on the settings. Remember, this is your settings. These are the things you put in your settings. Now, the next thing is security. Now, this is like what are the things you like to trade? Of course, you put all the classes in the settings. Now, you want to choose the security each, because some of them, maybe you want to trade this one, you don't want to trade the other one. But here, you don't have a choice. You only need to follow whatever we choose for you. I mean, especially if you're a new one. Now, if you're already experienced, you have a pairs that you trade before, no problem. Whatever pairs you put here, it doesn't matter. Well, it does based on your account size and your experience, but it doesn't matter in terms of whether the strategy applies to all classes, okay? But just make sure that you choose this if you are new. And I will just recommend this for everybody. Just follow what you have here, and which is almost the same thing as we have before on our normal Manara settings. For those of us who have done the settings of their Manara, you know, first of all, we have the major classes of pairs, and all the major classes are what you need. So I don't need to mention them on the major. Just make sure you are choosing everything. Now, when it comes to minor and exotic, you don't choose everything because there are some currencies there that are not tradable. You know, they are not tradable. I mean, you don't want to go into all that because trading is not just about choosing, it's about something you understand the data and their behavioral pattern, right? So now, what we have here Just look at them. If you can screenshot while I'm doing this, fine. If not, of course, you always have a video later on. But just look at odd chef, odd JPY, that's chef JPY, Euro odd, GBP card, GBP NZD, NZD chef, NZD JPY, and then we have odd NZD, card chef, card JPY, Euro card, Euro NZD, GBP odd, NZD card, and that's all under the minor and exotic. Okay. All right. So these are the things you choose. Now the bonds, just make sure you leave it and you let go. Don't even come close. As a matter of fact, switch it off. As I've done just now, switch it off. You don't need the bond. Indices, like I said, do away with them. I mean, if you are new, right? But if you're already a trader and you've been trading indices before and you have a very robust account, well, if you're a trader, you should have more experience to know that you don't use a small account to trade this kind of high volatile pair. So ignore if you are new, just ignore this part. But if not, you can go ahead if you are experienced on these ones. Okay. Now commodity, like I said, switch it off. I mean, the only thing I see on the commodity is oil, US oil. But I won't advise you. There are a lot of things to trade as a newbie. You don't need this one. Switch them off. Okay. Switch them off. Okay. All right. So also let me just switch this. So just tap on this one. You switch the indices off as well. Except your experience. Now, metal, you leave that, but I mean, you can switch it off because at first you have all of them like this. Let me show you. You have all of them like this. You have all the metals highlighted. So in order to, because you only need gold USD here. Here, you only need what? Gold versus USD. Now, instead of you tapping them one after the other, you can just switch everything up first of all, and then you choose gold versus USD. And that is the end of the security. So everything is chosen here. Those are the things you will see here on this list. Now, as soon as that is done, you come to view, you save your settings, and that's it. Now you have this strategy. The strategy is completed now. Everything you need to make money is completed now. Now, so the next thing we want to talk about is how it works. Okay. Now, how it works is this. So the moment you set up and you click all this, what you see here, you see the lists of all the pairs that are available for trading based on the preferences at the time that you are. You understand? At that time, okay? Which means in real time, right? So it will show you. So if you, all those ones you're seeing here are probably, these are ideas that were sent at the last minute of Friday, which was, of course, the market always closes on Friday, right? To reopen on Monday, which is to reopen on Sunday evening, right? Which is today. Yeah, anytime from now, the market will open actually. So now, depending on the country you are joining us from, so the timing difference and all that. So here now is 8:30 p.m. GMT plus one. So in few hours from now, the market will open. But this was the last one. So these ideas have not really activated, or some of them already moving before the market closes before the market closed last Friday, right? Before the close of the market, yeah. So now those are the ones you have here. So these are the way you have those lists. So as soon as you have this list, now there are rules to choosing which one you will take. Now let's talk about the rules now, guys. So I'll talk about the rules. Now the first rule, I'll do it. I don't want to see it in the I mean, don't let it intimidate you, especially if you're new. Okay, the rules are very simple. Okay. Now the first rule of the game is I'm going to slant my phone a bit. Now, because I'm using a mobile phone, some of the informations are hidden. They are hidden here, except you slant them. You slant your phone. That's where you see those hidden information, right? Now, what are the hidden ones? You see them now. Because the first rule is you only take trade ideas. Okay, before I say that, let me introduce the panel to you. The panel. Oh, sorry. All right. So what you have here, we have let me use my pointer so you see what I'm showing. Okay. Oh, sorry. Okay. All right, guys. So as you can see here, Oh, my pointer is still not working. All right. So what you have here is a symbol. Of course, you know what the symbol means. The symbol of each instrument, the pattern, which is the strategy we have chosen for this. I mean, the pattern, of course, that we are using uh to kind of trap our setup, the kind of setup you want to use. So we call this one the setups. Okay, this is what will help you to recognize the setup you are using. So each setup have their own name, which are based on pattern. Okay, so we have all the names, the three things that we chose. These are the three patterns that we chose: the bat, crab, and Gatley, right? So the time frame talks about the time frame. Of course, you know that status. Now, this I need to explain. So whenever you see whichever one you see complete, it means the ones that are already that have gotten to the entry. So you see that most of them are already complete. In fact, I would say all of them are already completed. All of them because they have happened, but just that they couldn't get to the end of the trade before the market closed out on them, right? So they are complete because they are all at the entry. So this is the status. It tells you the ones that are completed. It tells you the ones that are successful, which means the ones that are already won trades. It tells you the ones that are not successful, failed ones. I'll show you all this one. So you see things like that. When you see successful, it means the trade actually won by hitting TP1 and TP2, which means profit. If you see failed, it means it hit stop loss. Okay? And when you see complete, it means the trade has activated but not gotten to profit yet, neither has it gotten to the stop loss yet. Okay? So you can't, that one is like neutral, neither win or loss. You understand? So now the next thing here is the date and time. Okay, so it shows the date and time. Now I'd like you to know that this is done in what? In an ascending order, which means anyone you see here is the last trade that was sent. The one before that was the one sent before this. So the beginning of the day, if you are looking for the trade for the beginning of the day, you have to go down. Okay, the first trade of the day starts from below. So if like you see November 24 now, if you want to see the first trade of November 24, you have to go down till you see 23. After seeing the 23rd of November, the next 24, the first 24 is the first idea of the day. So when you see this, you know that all these ideas are the latest one. So the ones below are the ones that were sent first. Okay, but all these are not even more important. The most important thing I'm coming here to explain to you is this. Now, in forex trading, this is very important. Reward to risk. What is reward to risk? Some of people wondering. We have these numbers. What are these numbers for? Reward to risk is simply talking about how much you risk and how much reward you get in return. So it's simply telling you about the amount of reward you get on every risk you put in. Do you get my point? So any number you see here is talking about the multiple of what of reward you get for every risk you take. Okay, so let's say your risk on every trade is $10. It means if you win the trade, you're going to win the trade in multiples of what 3.57, which means you'll be winning $35.70. Do you get the point? So here, if you win the trade, it means you're going to be taking, so even if you invest $10, you'll be getting back $48.90. If you win the trade here, it means you'll be getting back 3.5, which means you'll be getting back $35 for every $10 you put here. Do you get it? So which means for every, let's say it's $1, for every $1 you put, you get this multiple. So this is like very important. Now, why is it important? It is important because in trading, like I told you from the beginning, there will be losses and there will be gain. And I told you about something. I said there's a difference between multiple wins and winning rates. You understand? I said that, right? Multiple wins simply means the number of time you win. So which means, let's say you have 10 trades in a day. If you win 7 trades out of 10, which means you won 7 times, right? You say, oh, well, I want 7 trades out of 10. So that 7 times is the number of trades. So that's like multiple winnings. Okay? But when it comes to winning rate, you may have 10 trades in a day and you will lose 6 out of them and you only win 4. Now, if you look at in terms of multiplication now, you will see that the number of winning is so less. So you can't say more winning. But the question is, are you profitable even after that? Yes, you can be profitable if you have a good reward to risk. So that's what increases your winning rate. Because you know why? If you lose 6 trades, assuming you invest $10, no, that's not the word, not invest. Assuming you risk $10 for every trade. If you lose 6 times, which means 6 times 10. Sorry, yeah, because you are risking $10 for every trade, right? Now 6 times 10 will give you $60, which means you would have lost $60, which is fine, right? When I say fine, it may not be fine in terms of like, oh, $60, that's a lot of money. But the question is, wait till you hear the winnings. Let's say you now let's say you have 4 winnings, okay? You have 4 wins and 6 losses. 6 losses has taken $60 away from your money. Now let's look at the 4 wins. Assuming the 4 wins is 7.8 each. Each win is giving you 7.8. I mean, if you multiply 7.8 by 10, that is $78.20 for every win. Now multiply $78 by 4. Do you get the point? Whatever you'll be having will be way more than whatever it is that is you have lost, which is $60. Even one win alone have covered your losses. If you want just one out of the 4, that has given you $78.20, and you only lost $60. Do you see what I mean now? So when you say winning rate is talking about your ability to be profitable. While winnings is talking about the number of wins. Okay, you can have even more winnings if your risk to reward is not okay. Your loss can still be same as your winnings. So that is why the first rule of this game or of this strategy is any trade that is not giving you minimum of 2 and above. So it means 2 and above for your reward to risk. You don't take them. Okay? You don't take them. Now, let me show you an example. For example, let's say we have this trade here. As you can see here, this is 1.97 euro odds Gatly M5. This trade here, if you look at the winning rate, is 1.97. Now, according to the rule, you shouldn't take this trade, right? Now, guys, I want you to listen to this very carefully and don't get it twisted, okay? Now, normally you will avoid this trade, but according to our strategy, there's a twist to it. There's something you can do to make it come to 2, so you can still take it. So what will you do to it? Now, I want you to pay very good attention to this. So when you come here and you see that this trade is 1.97, now remember, whenever you tap any trade idea here, it will reflect, to show the chart, the trade, to show it here. So this is what you have here. Below there, Euro odd, that's Euro odd, 5 minutes, that's Euro AUD. That's what we mean by odd. Now look at it. It's talking about so let's check this out. I want to show you something now. Where is the tool? Okay, let me slant it like this so we can see it clearly. It can be easy for me to really calculate this. Now, all you need to do, guys, is whenever you enter these trades, any trade you enter under this strategy, guys, just go straight. Don't set your TP to target 2. Always set your TP to target to C, to letter C on the pattern. Can you all see the letter C here? Look at the letter C area. With that, you should be having, oh, I've moved it. By mistake, I've moved it. It's supposed to be around here. So if you see the letter C, this candle is actually covering it. The letter C is here. Don't worry, we'll check another one also. So if you see the letter C here, now if you look at this trade, you have the stop loss. Let's go there first of all. Let me check another one. Let's check another one for the sake of clarity, because the C is hidden under this, is hidden under that candle, and I don't want to scatter the whole thing. I mean, if there are other ones, why should I bother myself and waste time on adjusting this one? Let's look for any other one that has less than 2 risk to reward. Let's see. Oh, these are the, okay, we only have one of it. Don't worry. Okay, let's just use it like that. So anyways, what you just do, guys, when you come to this part, you see what we call stop loss here. Okay, this is the stop loss here. Can you see the stop loss on the red line? This is the entry. Now, the reason why it is not up to 2, I will show you the reason why it's not up to 2. Let me show you why it's not up to 2, or the risk to reward. Okay, yeah, this is what I'm looking for. All right, good. So these tools that are here, these tools that are on this side, you can use them to measure. You choose the price range. Price range is used in measuring. Sorry. Okay, I'm going to do, so I'm doing the full screen now so you can get it clearly. Now, this price range is here. Is used in measuring the price distance. Okay. So now look at the stop loss. So if you want to know the risk to reward, so you want to know how much you are risking here, you start from this entry up to the stop loss. Now, if you look at it, that is 59. 59 simply means 5.9. Any number you have here, you divide it by 10. Whatever result you get is the actual number of pips. Number of pips. I believe all of you know what they call pips. If you don't, go to your back office and watch the basic forex, okay? So you have 5.9 pips, guys, for your risk size. Now, if you're going to be having, remember, I said minimum of 2. Whatever you be taking should be minimum of 2 risk to reward, which means if this is 5.9, the profit should in total should be more than what should be double of 5.9 minimum. So if you look at this now, you see that 5.9 means 5.9 should be giving you like 11 sorry, 5.9 should be giving you like 11 points, let's say about 12, right? So if you want the double of 5.9, that should be giving you like 11.99, something like that. Let's say about 12, right? Now if you look at this idea now, you see that from here, my hand shifted it. From here, it was not up to 12. It wasn't up to 12. If you look at it, it was not up to 12. I think it's about 11 point something here, 11.6 or so. Because of that shift, that's why it's making it to be completed there. But what I'm trying to say is this. So when you see it here, all you just need to do is you make your profit, your take profit will not be at target 2 anymore. You move it down to C. C is the last angle. Look at this shape you have here. This shape you have here is, look at D. Can you see the letter D at the top? Letter B here. Letter C is just around here. Let me just show you with the pointer. Letter C is around here. So your take profit will now be, your take profit will be, so you put your line here around the letter C. That will help you to determine your take profit. So your take profit will be 1.66044. With that, you have even more than 2 as your multiple. So you don't have to ignore that trade. That is 1.9. Remember rule number 1. Rule number 1 is what? Your risk to reward must be 2 and above, or above, isn't it? That is rule number 1. Rule number 2. Rule number 2. Now, this is a bit tacky, but you have to be you pay very good attention, you understand. Rule number 2 is the idea must respect the trend. Now, for those of you who have seen videos on what they call trend, so you understand better. Now, what is a trend? Of course, it's talking about the direction. Okay, it's talking about the direction of the market. Either the market is on its way up or it's on its way down. And you all know, if the market is on its way up, you look for what? Buy. You look for only buys. If the market is on its way down, you look for what? Sell. Now, when it comes to bat and crab, okay, when it comes to bat and crab, whenever you are told to buy, for example, let's say you are told to buy here on this AUDJPY, you see the arrow there, the green arrow is pointing up. Green arrow pointing up means buy. You should know this by now, isn't it? Now, when you say buy, you look towards your left before you take the idea. You look towards your left. You see it now? You want to be sure that the market is coming from the downward side up to the upward side. The market is coming from down to the top. That is, so when you see that, then you take that for what? A buy. So you take it. If you say a buy and you see that, you look towards your left. This is your left now, as you can see. Let me show you with the pointer again. As you can see here, look at this. Look at the market coming from the downward up to the side, to the upside. Now, which means the market is on its way up, which means you look for buys. And if the strategy says buy, after checking your risk to reward that is up to more than 2, the next thing you want to come and check is you move this market you move the chart towards the right, so you can see the left side to see whether the market is coming from the bottom to the top, or it's coming from the top side to the down, okay, to the downward side. Now, if you look at this one, it's coming from the bottom of the market towards the top of the market, isn't it? Now, this is valid, so you can take it like that. But if it's a sell, for example, let's go to this sell, USD CHF. Okay, USD CHF, which is bad. Now, you want to make sure that what? The market is coming from the top. Look at it. It's coming from the top to the downward side. Now, you can take this one for a sell. Do you see it now? That's rule number 2. Now, I said bat and crab. Only for bat and crab. As you can see, the first one is bat and the crab. You follow the trend. The only one that is called counter trend, when you say counter trend, is Gatley. Counter trend means it's always like is a determinant of a trend that wants to pull back. Pull back means if the market is on its way up, in between that going up, sometimes the market will want to come down a bit before continuing the journey up, or is totally reversing downwards. Now that is Gatley for you. So how do you now look at Gatley? Anytime you see a Gatley idea, when I say Gatley, like this one, and it says sell, right? What you want to see is opposite of what you have been looking for. Like this one now, is saying sell. As you can see, you look towards your left. What did you see here? What can you see here? You see that the market is on its way up on this left side. Look at it, on its way up here. And then what happened? The Gatley comes up. So when the market is on its way up, that is where you want to see a sell. So it's on its way up and the Gatley appears. So when you see a Gatley, make sure that you look towards the left. Whether a short move like this or a long move, so long it's coming from the down to the top, then you can take it for a sell. You remember, unlike bat and crab, a sell, it has to come from the top to the down. But for a Gatley, it's opposite. For a sell, it has to come from the bottom to the top. And when you see a Gatley that is a buy, it has to come from the top to the bottom for a buy. So that is rule number 2. Rule number 2. Rule number 3. What is rule number 3? Rule number 3 happens to be the stop loss, for the stop loss. Now, guys, any of them, whether Gatley, bat, crab that you see, when Manara send you those signals, make sure you come to this stop loss area and you put a line. You come here, one of the tools, carry this line, take this line. When you pick this line, put it on the stop loss area. The stop loss is that red line you see here. You see here under the stop loss, which is say 98.31177, right? You put a line here and make sure that any stop loss, if it's a sell, sorry, if it's a buy, the stop loss must be below the X. Can you see the letter X there? Let me show you the letter X on the pattern. Look at letter X here. Can you see the letter X? Stop loss must always be below the letter X for buys. Okay? For buys, your stop loss must always be below. Now, what happens if Manara gives you a trade and you see that the stop loss of that trade is kind of on that line, the same line with X or above the X for a buy? What do? You bring your line and make sure you put your line anywhere below the, what have I done? Anywhere below the X. You can choose any number below the X. Just make sure it beats just a little bit below the X. That becomes your stop loss. Remember that for a buy. For a sell, let's do for a sell. You know, sell, stop loss is at the top, right? So your stop loss must be above. For a sell, stop loss will be above the X, not below now. For a sell, stop loss will be what? Above the X. Look at the X at the top. So this stop loss must be above the X. Now, when we say X now, not the letter X, but this triangle under the X, right? So let's check if this is what it's or not. So you bring the line here, you bring it on that red line, the stop loss, which is 1.6627, and you place it. After placing it, you want to be sure if it is, okay, now I've placed it. Now, the question you want to ask yourself now is, oh, what have I done? All right, sorry. Okay, let me just go to full screen. Now, look at it. The line, is it above the X or not? It is. So this is a good one. Did you get it now? For a sell, remember, your stop loss must be above the X. For a buy, your stop loss must always be what? Below the X. That is the third and the last rule. I think that's the last rule, right? That's the last rule. Yeah. So for you to take this trade, those are the rules of the game. Okay. Okay, let me add this last rule to it. The last rule of the game is when you hit your target, stop trading. Don't be carried away by the winds. When you hit your target, stop trading. Now, I've been able to tell you about the strategy. I've been able to tell you the rules guiding the strategy. The last thing I want to show you now, or the next thing I will show you now, is a proof to you whether your time and money will be worth this strategy. Whether the strategy is exactly what I call it. Is it workable? Is it something that is effective? Is it really profitable? Now, for us to know that, we go back to the past. Let's check the past trades. Now, to check the past trades, I will change the setting here a little bit. I'm going to be changing the settings here a little bit. So here, I will choose complete. Now, remember, when you be taking this trade, you don't use complete for the strategy, okay? You use mature. But the reason I'm using the complete now is to back test. I want to, because I'm using the complete because I want the market to, I want the, sorry, I want this, the monitor to show me the ideas that have been completed, which means these ideas already must have, their result must have been out, whether they are failed or win. You understand? Whether they fail or they are successful. Okay. If they are failed ones, it will show. If they are successful, it will show. And if they are not completed yet, it will be just say, it will just say complete, which means they are still running. They are neither lost at loss or at win. You understand what I'm saying now? So let's look at this trade, the past trades, like I said. So we're going to be looking at them. I will only show you two or three, then I will go to the data to show you the summary of it. So we don't waste time because we're back tested and it's really a good result. Now to do that, I will slant the phone again so we can see the result. We can see the status of those results here on this corner. All right, so let's go to check this strategy, whether they are good or not, whether they work or not. Now, so this is 24th, guys. This is 24th, which was Friday. Now, for us to start, we need to start from the beginning of the day, which means if we are to take this trade, let's say you already know about this strategy like last week, and on Friday, you want to start taking your trade on Friday. Let's see the outcome for you. What would have happened with your account? Assuming, let's start with the minimum, the lowest account. Assuming you're trading with $100 account on the Friday, on that last Friday, using this strategy. If you had used this strategy last Friday, are you going to be ending the day with smile or with smile? So let's go to the beginning of the day. Remember, to see the beginning of the day, focus on the date and the time. The date and the time. Okay, look at it. After 23rd, the first idea on the 24th. Okay, this is 23rd on Thursday. We're going to Friday. Oh, what have I done? What has happened? Okay. Sorry, guys. My eyes were seeing double. My eyes were seeing double. Hold on. All right. Where is it? Where is it? Where is the beginning? The beginning. The beginning. Oh, see, imagine how many trades on Friday. Plenty trades on Friday. But you don't have to take everything. Don't even try it. That's the beginning of the end if you start doing that. Now, guys, so on Friday, the first trade idea that came on Friday, oh my god, I've made, oh my god, what have I done? Okay, okay, it's corrected. I just want to kind of, all right. So the first idea that came on Friday was card JPY. Can you see it now? So assuming you started trading this idea since last week Friday, this idea came around 1 a.m. So your first trade idea, let's say you started with $100, okay? You have $100 account and your target, you already have a trading plan. Let's say your target for the day is 10%, which is the best thing I recommend for everybody. Any amount you have in your account, maybe your target at the end of the day should be highest, maximum 10%. Don't do more than that if you want to be compounding. I mean, that's a good start, isn't it? So let's say you took this trade idea 1 a.m., what would have happened? Remember, focus on the risk to reward. It was a successful, as you can see, it was a successful trade, which means it hit TP1 and TP2. And look at the risk to reward was 2.12. So you know what that means? If you had reached $10, for example, on that $100, let's say you risk $10. It's an example I'm giving, right? To make it easy. Normally I would go for $5 on my $100, but actually for me, because $100 is a small account actually, in forex trading, $100 is not really encouraged. But because people have to start from where they can afford, isn't it? because I mean, yeah. So if you're doing $100, you can't be talking about 1 to 3%. You have to talk about minimum of 5% or 10. Okay, so let's say 10 for easy calculation, so we don't have to be cracking our brains. So if you had reached $10 on this trade idea, you would have made $21.20. That is 20% or 21% instantly on the first trade on Friday. Meaning, if your target is 10%, is you will stop the trading immediately that moment. You don't have to trade. Imagine how good it will feel for you. How sweet it will be if you hit your target for the first trade of the day around 1 a.m. You have the rest of the day to just do other things. Don't look at trade again. But I know a lot of people will not do that. And this is one of the problem I talked about from the beginning, the psychology. Okay. That psychology area. Okay. So you have to change you have to change the way you see things. If you do that, you'll be successful. Now, you see, you've made $21, 20 cents on 100 USD. I mean, who does that? That's a good one, right? Now, let's move on. Let's just, now, for the sake of proving to you that this strategy is ideal, is sweet, is so profitable, not for you to continue trading after your $21. I'm not saying that. Just for the sake of what? To prove the potency of this strategy, right? Now, the next trade, AED USD, as you guys can see, AED USD was the next trade. Now, is a fail. So let's say you took this trade now, you go losing $10. But do you know there's one like 99% that you'll not be taking this trade? There's possibility that's 99% possibility that you'll not be taking this trade. Do you know why? Guys, do you know why? I mean, anybody can help me to tell me why. I wish I can see the chat. I would have asked you. You should ask me why. Now, the reason is this: if I check this trade now, you all will see that one of those three rules, this trade idea would have violated one of them. And I believe it must be the trend. So which means if you had used the rules, probably you would have avoided this trade. But let's assume you couldn't even avoid it. Okay? Let's say you took it, or let's say even you after applying the rules, it still happened that you failed this trade. I mean, this trade was a loss. So what will you lose now? You lose your $10, which you risk, isn't it? Now you already have $121. So if you lose $10, you've been left with $111, right? Now, the next one came again, which is a crab. You now took this one, and it was a successful one. But which I forgot, I think I'll add that to the rule again, is you don't take the same pair, go in the same direction twice in a day. Now, this is odd USD that has failed. The next one too is odd USD, but it was a success. Now, I would not want you to take it twice, because what if it was going to, except of course it meets the requirements. Except of course it meets the requirement this time. Do you get it now? If it doesn't meet the requirements, let's say for example, let me make it clear. Let's say you enter this AED USD, the first one that failed, and it met all the requirements, yet it failed. The next one comes, don't take it. If it's going to be AED USD, the same direction again, don't take it. Hope you understand that. Let me rephrase again. Whenever you see a pair, let's say like you see AED USD here now, the second one. Now remember all the rules, and you apply all the rules, and you see that the rules are respected. All the rules are respected. Okay? Yet at the end of the day, it was a loss. Do you get? Now, remember all the rules, right? The first one, risk to reward, respected. You check the trend, respected. For a bat, it has to be what? It has to be a market that is coming from the top, coming down, for you to take a sell. Respected. The third rule was, what was the third rule again? The third rule was the stop loss. The stop loss must be above the X. Okay? The stop loss must be above the X. Those are the third rule, right? The fourth one is just about you. Meaning when you hit your target, stop trading. So the moment you check these rules and they are applied here, yet it failed, you lose the trade. Then when you see it again, same pair, AED USD, then don't take it. But if you apply the rules, okay, you apply the rules and it's won, okay, fine, you can take it. Or you see it and you apply the rules and you see that the rules are not respected, okay. So of course you are not supposed to take it, right? You ignore it. Then if another one now comes, you apply the rules, now see that it's respected, you can take it. Those are the only conditions where you can take two pairs same day, two pairs going in the same direction the same day, except you see the first one as sell and another one comes as a buy. You know why I said so? If the first one failed after the rules, it means the market is not favorable. There's a news, there's something fundamental behind whatever is happening to that, I mean, behind that pair for that day. So whether rules or no rules, you're not sure of it. And you don't want to take trades that you're not sure of, but there'll be other trades that will be coming, right? So let's say this one now, you took this one. Let's say this one is a fail. Look at the next one. Just assume the next one now is a success. Look at the success, the risk to reward rate or the reward to risk rate ratio, which is the same thing as rate anyway. So the ratio of that risk reward to risk is 5.03. Do you know what that means? That means you risk your $10, you'll be making $50.30 on this one. The next one after that is success also. You invest your $10, you'll be making $37.20. If you add that 50 to the former $11 remaining after the loss of the $10, you have $60. Then you add $37, you have what? You have 90 something dollars. You've almost made your 100%. Like your $100 is almost becoming $200. Then if you add the next one, AED card, 3.67 again, guys, you would have made $120. Sorry, $136
The guy should
profit.
tell me this and run and enter hole. God
I mean,
forbid.
I'm surprised. I'm
Like
I'm
everything we're
surprised.
doing is
You
to
see, I'm surprised that we are sharing information that can give you so much money. Yet some people will have time to discuss on the background. You know, you'll be missing out. And then when you start trading and losing money, you'll be like, oh, what's going on? This is exactly what is going on. Except this is what I'm saying is not making sense. Then, well, maybe, I mean, I can't help that. But if it's making sense, you should really stay with it. Now, guys, I think I'll be able to prove to you. You see this success, all of these successes, they have higher rates of winning, which is what the reward to risk is high, which when you multiply it by the amount you are risking, is a lot of money. Imagine you are risking $100. Let's say you have like $5,000 and you are risking $100. You would have made a lot of money already in the morning time. All these are morning time. Do you get the point? Early in the morning, you're done. Now, this is a proof for you. But then some of people say maybe this is just by luck. Okay, let's leave Friday. Let's go to 23rd, which was Thursday. Now, for us to do that, we go to the beginning of Thursday. I mean, probably you may say, oh, this is just try. This is just by luck. I mean, we can't just count one day. Maybe it was a good day, you know. Maybe it was raining that day, you know. Maybe just give it an excuse. So let's go to 23rd and see if the strategy would have blessed you on the 23rd. Okay, 23rd. The first trade idea, remember, you know one thing I like about this idea? You see both failed and then you see win, right? Now, so look at on third, 23rd was in fact, for those of you who remember on the 23rd, the very worst day in the market. A lot of irregularities happening and all that. So what happened now? Let's look at this idea. Now, you see all these ones failed. GBP NZD failed. Euro NZD failed. And if you notice, all these failed, they actually come up with NZD for you to know that it was a fundamental problem. Look at all the NZD. Anything NZD failed that day. NZD USD failed. GBP NZD failed. GBP NZD failed. Now remember the rule. Like this one, you would have taken it twice because I said if the first one is failed, of course, the second one, of course, will come like that. It's the same direction. They would have been failed. And also, so how many failed did we count here now? Can we count it? About 5 failed. Now, you would have traded all these pairs, and you all will agree with me. Do you know why? If you don't know why, I can take the time and we'll go and check it now. If I check all these trades now, you see that they will be missing one of our rules. And if they did, fine. More reason why you not take them, right? So, well, even at that, even at that, even at that, okay? So if you had failed all these ones now, that's like 5, isn't it? 50, that's like 50 USD, which I mean, I'll believe me for that because at least I told you all the rules. Number one, look at GPNCD, failed here, and it came again, and I still took it. I mean, that means you don't know what you're doing, right? Euro USD, look at it here. I mean, the moment you see all these ones, it's enough for you to take them. In fact, GPNCD appeared 3 times. So, which means the first time failed, the second time failed, the third time you won't be taking it now because I already told you only take it once, except the first time the rules were not favorable, you keep using the rules. The rules will guide you and reduce your losses, right? The rule, those rules will reduce your losses, right? So now let's look at the next one after that. The success here, 3.4, right? That means this is $34, right? So let's say even somebody who is gullible, who have lost $50 here, would have made $34.40 out of that money. Then again, there's another $10 fail. On that 23rd was a bloody day. There's another $10 fail, another $20 failed, right? Now, after that, what do you have? A success, $58 win, $34 win, $61 win. I mean, 6, 3, 5. That is already 100 and something dollars, which supersede all the losses with some profit. And look at all the successful ones here now. They're already done for the day. Do you get my point now? Now, so it would be like what I'm saying, I'm not sure. Okay, guys, let's just check something. I want to check something, though it will take us time. Okay, before we check that, let's check for on the 22nd again. Let's check for 22nd again. 22nd. 22nd. This 22nd, right? So let's go to the beginning of it. 22nd, 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 22nd. Then we'll now check. So the last thing I'll do here now is I'll check, we'll now check the rules, check the ones that are failed. We see whether if they respect the rules or not. So this will help you to prevent you and reduces your losses. Now let's check 22nd. So let's say you took the first trade on 22nd, you made your $24.80 because this 2.48 was successful. The next one after that was a failure. You lose $10 out of the $24. So that's okay. You're still having $14.80 profit. Then after that, it was a successful one. You made $3.5, which is $35 again. Imagine you lost $10 to get $35. Added to your $14, that's like 40, what's that? $46, no, $49, right? The next one again, assuming this one, like I said, this one will be 2 if you use the C. If you use the C method that I talked about, always making your profit at C. Put your profit at the letter C area. So this will give you 2. So that's $20. This one also success. That's $43 again. Another $43, $62. Come on. That's a lot of money already. You should stop trading already by now. Even after this fail, $10, another $36 came again to pay back. Guys, I hope you are seeing what I'm saying, right? That is what I'm saying. So now let's go to check something now. At least I proved about 3 days to you now to show you that this strategy is very, 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 very effective, right? Now let's talk about failure and success using the rules. Okay, using the rules. Okay, so let's talk about Euro JPY. It was a failure. Let's see the reason why it failed. If you respect the rules, let's see. If it doesn't, we will know. Now, guys, remember, this is a buy, right? This is a buy, right? Can you see it? Now, the first rule is 3 point. The first rule is what? The reward to risk must be high, minimum of 2. It respects the first rule. So that is a pass for it. It's fine. Let's check the second rule. Did they respect the second rule? Remember the trend. What is the pattern again? Bat. And I told you that if you are selling, this is a buy, right? If you are buying, you want to see the market coming from the bottom to the top, right? So let's check if that is what is happening here. So you respect, oh, I've moved that pattern. So you see it respecting, oh my God, I messed up here. I can't use this one again. I've moved that pattern. I don't know the actual, I see me moving all the pattern. Sorry guys, let me use another one. Oh, this one is not up to 2. Let's look for another failure. My hand moved the pattern. Okay, let's use this one, NZD card. Okay, NZD card was a sell. So let's check it. Reward to risk is what? 3.1, which passed our first test. Okay, our first rule, sorry. The second rule is what? If it's a sell, we want to see it coming. Want to see it coming what? From the top to the bottom, right? Now, if you look at it, it passed our what? It passed our second rule. Look at the market. It's coming from the top to the down for a sell. Now, what's the third rule? The stop loss must be above the X, right? The stop loss must be above the X. Let's check that. Now, if you see the stop loss now, you see the stop loss, for me now, it is not above the X, as you can see, right? Now, do you know the funnest part? You see what I'm saying now to prove the rule. Do you know that if this stop loss had been above the X, probably you would have won this trade? Let me see. Above the X, right? A little bit above the X. Oh, what's wrong with this? Okay, this is the D area. This actually was a win. Okay, it was almost at the TP2. Look at it, guys. It was almost at the TP2. That doesn't count. Meaning you would have made some money, but just little away from the TP2. It now went up. So I would say these actually respect our rules. We respect our rules. If you look at it, even at that, respect our rules. Look at it, just few points away from the TP2. I mean, for example, now, do you know the funniest part about this trade? If you enter this trade with $10, you would have made like, let me see how much you would have made. You would have made, you would have made like, you got to this part. So if you invested $10 on this trade, you would have made like $110, right? Yeah, $110. Stop loss was the stop loss was $40. So you would have made more than double of what you invested. So because if you invested $10 here, if you invested $10 here, 4 pips, right? Then here you see is 11 pips already at where it stopped. 11 pips. And meanwhile, double of 4 is supposed to be 8. So at this 8, you already would have made your money. But if you set your take profit here and you were not there, I mean, it would have come to give you profit and then now danced away to the SL and you now lost it. So if you look at this one now, it meets our criteria, yet, it still gave us, it was a losing trade. It was a losing trade. I mean, because it didn't get to the last part, but at least it gave a lot of profit that I would have covered your SL times 2. But we are looking for the one that actually give us a take profit. I mean, that gets to the TP2. Now, let's look at another failed one. See why I said when you take NZD card the first time and it's a fail, after respecting our rules, still failed. You don't need to take it the second time. So I won't take this one the second time because it failed our rules. It respected our rules, yet it was a stop loss. So you don't take it the second time. Let's look at, no, this one is not a fail. Let's look at another failure. Odd NZD. Why is NZD? That's why I don't like that pair. NZD. I don't like that pair, really. Have you noticed almost all the NZD? Maybe I will even be removing NZD from this pairs. I'm serious. Do you see that most NZD? This is why I don't like NZD. I always failed. That country, I don't know what's wrong with them. New Zealand. That's why I said I don't like them when I was choosing all those. I don't like NZD. So this is another. Sheriff, please remind me, guys. If I were you, this is what I would do because that's how I do my aggregates. When I see a particular pair having problems like this, I will just minus it from whatever I'm doing. So when you are going back to your security, just remove anything NZD. That's what I will do anyways. Okay, let's just check another one. I don't want to check NZD. Let's just take another pair that is a fail. Okay, odd JPY. Let's look at odd JPY. Now, this odd JPY was a sell. Remember, guys, it's a sell. Now, if you look at it, hello, guys. Now, I want you to unmute yourself. Any one of you can unmute yourself and answer me. Let's look at our first rule. What's our first rule? What's the first rule? Please, if you are muting, you are contributing, and you are participating, not saying any.
The first rule is that our reward risk ratio must be above 2.
Good, thank you very much. So, is this one above 2 or not?
It is.
Good. Now, the second rule is what?
The trend.
So you have to observe the trend of the market.
Good. So if you look at this trend now, is a sell. And remember what I said about the sell, that the market must be coming from the top downwards, right? But this one now, if you look at it, is it coming from the top or from the down, upward?
Coming from down, going up.
So which means this is the reason why we would have taken this trade. So because this one didn't follow our rules, second rule. So not following our rules now, you would have avoided this failed. So which means you would have lost this trade because the rule have prevented you from losing it, right? Now let's look at another one. One more fail. They will now check successful one and see if they follow our rule. Let's look at Eurochef again. A cell, Eurochef. Eurochef. Now let's check the first rule. What's the first rule again? Sorry. Rewards to risk, right? You can unmute and answer, okay? What's the
Yes,
first
the
rule
first
again?
rule, the
Uh,
risk reward must
the
be
risk
above
must
2.
be above 2.
Okay, which is 3.6 is above, right?
Yes.
Yeah.
Good. So the second rule is what? The trend must favor the other. So now it's a sell, and a sell must be coming from the top to the down.
To downward.
Looking at this market. Is it coming from the top to the down or from the down to the top?
Down to the top.
As you all can
No,
see, it's coming from the
coming from
down to the top.
down
Look
to
at
the
it.
top.
See it's going up instead of wanting to be coming down. So that alone would have avoided this loss. Do you see why the rules are very important? It reduces your number of losses. Now let's look at successful ones if they follow our rules. Let's check this one is successful. You know, check that is successful here. A crab for a sell. Now, first of all, the first rule 4.7, which is more than 2, correct? Man, this is a lot of money. $47 on the $10 idea on 100. Now, the second one is what? If it's a sell, must be what? Coming from the top to the bottom. Now, to see this clearly, you shrink and you see. Oh, but anyway, that one doesn't mean whether I move it or not, doesn't mean. So if you look at this one, though, for me, I would have taken this one actually, because if you look at it, it's also coming from the top. It's coming from the bottom to the top. Do you get the point? It's coming from the bottom to the top. Well, he gave us the win already, but it's coming from the bottom to the top. So, or except, let me shrink and see where this thing is actually coming from. Okay, guys, it's coming from the top to the bottom. It's coming from the bottom, from the top to the bottom. Let me enlarge it. Okay, look at it. It's coming from the top. Can you see it, guys? Can you see it? Can you see it, guys?
Yes.
So it was coming from the top, consolidated here. So this one I would have taken it as well. So you see, it respected the first rule, the second rule, then the third rule, the stop loss, because I've moved that thing, but I know the stop loss was already above the X. So this would have given us a win. Okay. Now for satisfactory, let's check one more successful trade, and then we'll now go into the overall data that we prepared for all the trade ideas. Okay, for last week alone. For last week and a week before, I think. Let's look at this. I think we've checked all JPY, right? For a win. We haven't. Let's just look at this one. 3.4 past our rule. This is a buy. We expect it to come from the bottom to the top. Is it coming from the bottom to the top? Can you see it? Is it coming from the bottom to the top?
Yes, it's going up. Yes.
So it's respecting our rules. And the last one is the SL. Guys, forgive me. Using a phone is not easy, right? So, but I like to use the phone because the idea is for this to be mobile. Now remember, the SL must be below the X, which I said that. Okay, look at this SL now. Let's look at it. So for me, what you just do here, what you would have done here, though you didn't get to the SL, but in case of next time, is there below it, but it's not really below it. I would have preferred it to be below it like this. So you can just shift your SL next to take this trade in case of safety, yet you still make a lot of money because the ratio will be more. And then your profit must always be at C. Remember, guys, your SL must be below the X for a buy, and your profit must always be at C. And if it was at C, you would have made more money, even more than what you see here. So, guys, I think with that, I've been able to prove to you that this is a very good strategy using the past or the history of all these trade ideas. Now, to finally share with you the data, okay, I would like to call on Sheriff. Sheriff, are you there? I would like Sheriff to to present that side. Sheriff, are you still here?
Yes, sir.
Okay. All right. So I want Sheriff to show us the data. Okay. So Sheriff, you have to share your screen now. Are you ready for it?
Sorry, please. I have a
Yes, sir.
question.
Yes, sir.
Yes, please jot your questions there. Don't worry. Time of question will be coming in because so we can cover all these
All
things.
right.
Then you now ask your question. Okay. All right. Now,
All right, thank you.
Sheriff, are you ready? If you're not, I can just go on. I mean, we have the last part, which is the compounding part. That's the most important part. Sharif is not ready. All right, guys, let me just share with you. I think he sent me the data already. Oh, Sharif, you have to be ready. I think you have to be ready. Let me see if I have the data here. I mean, it's on my, where's my documents? Sharif,
Please, can you hear
I
me?
think I'll need you to share. Are you there?
Yes, I'm here, sir.
All right, just share what would have happened and all that. You know what I mean? Okay, all right, just share the data. Let them
Okay,
see
sir.
it,
Okay,
all the
sir.
results in one. So you can share your screen now.
Okay, sir.
So, all right. So guys, you can slant your phone to see this better. I mean, it's using a laptop. If you are using a mobile phone, when you slant it, it will be clearer. Yeah, Sharif, you can go on now. Quickly.
All right, sir. Good evening, everyone. So
You're welcome. Good evening.
let me start from the 24th. So on the 24th, we had a total of 44 field setups and 28 wins. And with that, on an $100 account, if you are risking 5% of your account, which is $5, on bats, you would have lost $95 and made $302, which means you are doing the plus and minus, you would have made profit, would have been profit. And on Gatly, $168 win, $125 loss. All of this put together here means that you have made $250 profit on your $100 account, which is way more than the 10% that you need. Okay, so let me go to another date now, on the 23rd. Yes. On 23rd.
Sharif, are you there? You're not audible enough.
And 10 wins. Okay, sir. Hello, can you hear me clearly now?
Yeah, we can hear you. We can hear you.
Okay, thank you. So on 23rd, there was 19 field setups and 10 wins. If you are using an $100 account and you are risking 5% of your account, which is $5, you'd have lost that $5 on BAT, and then you'd have won $104 profit on BAT. If you do the plus and minus, it's profit definitely. Then ungodly, you'd have lost $60 and you'd have won $86 profit. All of that put together for the 23rd is $96 profit, which is still way more than the 10%. Let me check on the 22nd now. Sorry, hang on. Okay, on the 22nd, there was 6 failed setups and 8 wins. On bats, you lost $10, still risking 5% of your account, which is $5, and you have won $53 from bats. Then ungodly, you have lost $20 and won $113, which is $136 cents all put together for 27. Then for the 20, and then 7. Can you hear me clearly? Hello. Hello.
Yeah, we can hear you, but it's breaking a little bit.
All right. All right. On the 20th, rather, there was 8 field setups and 7 wins. Yes. Then on bats, you are still risking 5% of your account, of your $100 account. Which is fine. You'll have lost $37. All that put together for the 20th, you'll have won $88, which is 88% of your account. You have to look at it from that angle, which is more than 10% that you need. On the 17th, also, you have lost. There was 29 field setups and 31 wins. On bat, you have lost $85 and you have won $235, still risking 5% of your $100 account, which is $5. And undoubtedly, hello. Then undoubtedly, you have lost $60 and won $304. All that put together, you have won $395 on just one day, which is over 300% of your account, when all you needed was just 10%. Let me check on the 16th now. Well, I think some data are missing for the 16th here. Let me check for other days, because it's just one trade there. For on the 10th now, there were 35 trails and 34 wins. On bats, you'd have lost $65 and won $212. On head and shoulders, I think these ones are out of the settings now. This was when we were testing head and shoulders, triple top together. But these ones are out now. So undoubtedly, you'd have lost $75 and won $105. All of that put together, you would have won $202, which is like 200% of your account. So every day has been profit all through. Every day has been profit all through. Then
Okay.
let me check for crab.
What about the overall? Okay, go ahead.
Okay, the overall.
Yes. Overall so far. So assuming you start trading with $100, using $5 on each setup from that date to the last to 24th, total profits would have made.
Let me start selecting the dates now. From on the 6th of November, 6th is selected, 7th selected.
Okay, I thought you did the overall
9th.
template, right?
No, I'll still check it here. I'm using the raw file here now. This is not the PDF.
Okay, can you just go to the overall?
Yes, that's
just
what
the overall, yeah.
That's what I'm going to now. So for the overall, since we started testing this strategy, you would have lost 147 trades, or there were 147 failed setups, and 129 wins. All that put together on BAT, you'd have lost $345 and won $1,000 plus. And on Gadley, you'd have lost $355 and won $940. All that put together on your $100 account, you would have made profit of $1,291.
Wow.
Yes.
You see that? That is awesome. Thank you so much, Sherry. Thank you so much. Now, guys, do you know the best part of this? This is not even compounding. This is just looking at all the trade ideas together. Now, talking about compounding, someone was asking me the trading plan. Okay. Now, before the trading plan, another question was about the stop loss. Okay. Now, the stop loss, I'm sorry, I won't advise you guys to use that data that I see that some of us are sharing, the data that says 0.01. Well, you can use that if you don't know how to calculate stop loss. Okay. Because if you use that, you are cheating yourself. Okay. Now, how you calculate stop loss, actually, it's the amount you intend to risk. Okay, you divide it by the number of pips. So let's say the number of pips for your stop loss, like I calculated, like I was showing you guys the last time. Let's say the number of pips of a particular setup is 7. Number of pips is 7 for stop loss, and you are investing. Let me use the word the number that is easy. Let's say the number of pips is 5, and you are investing. You are risking $10. Okay, for example, if you are risking $10, so all you do is what? You divide that $10. You divide your $10 by the number of pips, which is 5. That means you'll be using 2 lot size on that trade idea. You see it now, even with your $100, you're using 2 lot size. Can you imagine that? Now, if you have been using this 0.0 something, you will even achieve your aim. Imagine the winning for the winning pips now, the total pips of the winning is 10. Okay. Let's say the risk, the reward to risk is 2, which means the stop loss is 5 pips, and if you win, you have 10 pips, which means double of what you are risking, right? So if you are using $10, you divide 10 by that 5. Whatever you get is your lot size, which is 2. Okay. Now, if you win the trade, which is 10 pips, you multiply that 2. You know that 2 means $20, right? Am I right? Am I even correct? Yes, $20, right? So that means okay, 10 divided by 5. That is true. Is that true? Oh, sorry, wrong way. That would be 5 divided by 10. That would be 5 divided by 10. That is 0.5. Yeah, that's 0.5. Sorry, the other way around. So which means you divide the pips, okay? You divide the pips by your amount you are risking. So it will be 5 divided by 10. Okay, that will give you 0.5. Now that 0.5 will be your lot size. So for that 10 pips now, you'll be making $50. Imagine that. Now imagine even if you are using $5 as your risk, you still be making $25. But if you are using that what's it called, that data there is not accurate. That data you have there, you would have been using maybe 0.01, and another day you have $10, you'll be making $1 on that trade idea. So you are cheating yourself. So you need to learn how to, don't be doing shortcut. That thing is shortcut. You need to learn how to calculate your pips. If you don't know how to do it, there is what we call forex calculator, which I think for those of you who need that, I don't know how to do it. We will share it on the group for you. We'll share it on the main group for you guys. So you need to download it on your app store. I think they have the app store version and then the Android version as well. Okay. So you can know how to calculate your pips, so you will not cheat yourself. That is that. Now, talking about trading plan, guys, the goal, that is where I'm going now. So let me share my screen. I mean, how to become highly successful before the end of the year. And then, I mean, guys, if you follow this plan, you can even become a millionaire in dollars if you are very disciplined to follow this plan. That's if village people are not distracting, you know. I mean, you really, really make a lot from this. Let's look at it together. At least we are proving to you that now we've just shown you that this plan works, right? You've seen it from all dimensions. I've proven it to you beyond reasonable doubt. Mr. Sharif has also done the same thing by using data of even going as far back. You see that? Now, how do you put this to use? So, guys, let's say let's just assume you are using $100 a day, for example. Some of you are using 1,000, some of you $500, but let's come to the minimum. Okay, let's say you are using $100 a day, and like Mr. Sheriff has shown you on the data, you are risking $5 on every trade, for example. Okay, now your target every day is 10%. Look at it. This is it, guys. Let's calculate together. Your target every day is 10%. You're not doing more than 10%, which means if you have $100, the moment you hit $10 in your trade, which according to what you guys have seen so far, only one setup will give you more than $10. Or let's say if you're using $5, one setup will give you exactly $10. Because how do I know that? If the minimum reward to risk we are using is 2, remember, which means if you are risking $5, it will be 5 times 2. If you win, that will be $10. You're done for the day. If you are using $10, that will be $20 for you. You're done for the day. That is already 20% of your $100, right? So, which means it's achievable, right? Even just on one trade, you already meet this target. You see how low this can be, right? So let's say every day you plan to make 10% of your capital. Okay. Now, for the length of 30 days, you want to do this for 30 days. Now, the daily reinvestment means you are not withdrawing anything every day. You are not withdrawing anything from it. You want to be compounding it, which means you make $10 today, your capital become 110. When it becomes 110, the next day your capital will be calculated based on 110. So you are not touching it for the next 30 days. 30 days. Weekends, of course, we don't trade on weekends, so you say no. Now, assuming you start on Monday, which is tomorrow, for example, 28th. Now, how much you will be having in the next 30 days? Let's check it out. By the next 30 days, what would have happened? Number one, look at it. You started with $100 on the 28th of November, 2023. At the end of that 30 days, which will be the 9th of January, 2024, you will have had, your money would have gotten to $1,745 in total. Can you imagine that in 30 days, from $100 to $1,745? Now, if you remove your capital, which is $100, meaning you would have made profit of $1,645. Do you get it now? Now, the truth is, you would have made even more than this before then. But this is 30 days. Guys, this is what can happen if you use this strategy. Follow 10% a day, be disciplined, and then make sure you don't do more than that or you don't overtrade, and do it for 30 days without withdrawing. Your money can grow from this to 1,645. Guys, if you're in Nigeria, you know this is over 1 million, 1.6 million plus. But this is about 1.7 to 8 million there, at least for January. When everybody's shouting Happy New Year, I mean, you really know that it's actually a new year for you, isn't it? But then let me give you the big one that will disturb your sleep tonight. And that's my job, to make sure that you don't sleep. You get my point, right? To make sure that you don't sleep. Let's go for 90 days. Let's go for 90 days. Meaning you decide that, no, I don't want to stop by January. I want to continue for whatever it is. So let's go for 90 days. What would have happened if you continued even in January? My dear, by the end of that 90 days, which would be 2nd of April, right? 2nd of April, 2024, that money would have risen to 531,346.98 in total, which means you would have made profit of 531,246 by 98.98 at that point. Now, if you look at the breakdown, it's even here for you. From $100, $100 to 110, and like that, and you see it going down like that. This is how to become a millionaire. Being a millionaire in trading is not just about taking one trade a day and becoming a millionaire. You blow your account that way. It's by taking it consistently, following a particular strategy. Be steady and consistent and disciplined. Don't be carried away by other people's results. Just focus on your own target. Your trading plan is 10% a day. Your investment is 5% of any amount you're having in your account, or 10%. Make sure you stick to it, and stick by using this Manara setup. Don't use any other thing. If you want to trade minus, don't trade on the same account. If you want to take any trade at all on the group, all those trades you want to take, any other trade you want to take, you can have another account for that one. Don't disturb this account. Just make sure you use this Manara settings for this account. And I'll tell you why. Any other trade you take outside this, their stop loss are always big. That doesn't mean they are bad trades. They are very good trades as well. But to achieve this aim, you have to be very conservative. So the good thing about Manara trade is it gives you a very small stop loss, such that when you lose less. When you make money, you make multiples. And that's how to grow your account, because there's no way you're not losing Forex. But the point is making sure that your winning rate, like I said at the beginning, is higher. And that means your loss are very lesser, way lesser, while you're winning are way higher. That is what we mean. And that is the goal we have for you. So the challenge starts from tomorrow. If you are subscribed, make sure you use the settings. And if at all you can't start tomorrow, make sure by Tuesday you are done. Maybe for those of you who need to prepare yourself tomorrow, we are available for you. Meet your coaches, meet your mentor. They will explain how to do this. If you don't know it, whatever it is you're having any challenge, you can send a message. We are here for you. After all, you are in my team. All of you are in my team. Every one of you are in my team here. Every single one of you. So it is my responsibility. It is your sponsor's responsibility. It is our responsibility. The meaning of sponsorship is not just to recruit people. The meaning of sponsorship is to bring you in, guide you, mentor you to success. But that is if you are willing. Because if you are not willing, there's nothing you can do. I'm not a patient type. I don't like calling, running after people. No. Because the reason you join is to be successful. And I don't have to force you to do that. Because the moment I start forcing you, you start thinking that there must be something in it for me. Yes, if you're thinking it in one way, yes, there is, of course. But what is it? What is in it for me? What is in it for me is until you succeed, that's when I get whatever it is in it for me. So which means it's a win-win thing. So guys, we have to be serious. We have to make sure this product gives us the money. And that's the reason why we join. And I tell you, in 30 days, you can share a very wonderful testimonial. Now, let me now tell you how to build your business. I mean, the affiliate part with this strategy. It's simple. You be serious. What do you need to do now? Right now, all you need to do is call anybody you want to call, let them know that there's a way out. And if they ask what's the way out, you show them this. When they watch this video, if they can be patient, I mean, you have to be patient. After all, seasonal movies are longer than this. People still watch them. So watch this video and they see that this is something that they can fall on as a plan for this year and then the new year is enough reason for anybody who wants to succeed to join you and be part of you. And even you need to work on yourself and make sure that you achieve at least 30 days. Achieve your first 30 days. The result of that, your first 30 days will speak volume for you. You don't have to beg people. People will be the one asking you, how did you do it? And then you show them the same plan. And that's how it works. So champions in the house, I think with these few points of mine, I've been able to convince you, but not to confuse you, that Manara is king, economy is the academy, and you are the right person for this success. Thank you very much, guys. I think I'll take one or two questions. The time is fast spent. And then we'll call it a night. The video will be out. You get it on the group. Thank you so much. Thank you, Sheriff. And I really appreciate every one of you. All right. The ball is in your court now, guys.
Welcome, sir. Thanks,
So you
sir.
can- yeah. One question.
Coach, I want to ask a quick question.
All right, please go
Thanks,
ahead.
thanks for the rules.
Yes.
For me, when I came in with $100 account, I was told that the standard stop loss for $100 account is 0.01 as a standard loss, so that I don't risk much. But what I'm hearing you say this evening is that we
Okay.
can calculate our stop loss using a formula of the pips for the stop loss divided by the amount we want to lose. So if we have $100 account and we are saying we want to lose $10, it means, and the pips is 5. It means I can go with a standard lot size of 0.5. Am I correct?
So let me quickly tell you guys what stop loss means. Stop loss is a relative term. Stop loss is actually is addressing the amount you can afford to lose in a trade. So let's say you have your $100 account and the amount you can afford to lose is $5, for example. That's on a trade, something that I'll put in. Now, how do you now get your lot size? Lot size is not fixed. It's not a fixated stuff. You know, all those things people tell you 0.01 is just to help you as a beginner so you don't get confused. They don't want to make it complicated for you. That's why they help you with it. But the real way to calculate stop loss is based on the pips. Let me show you. Let me show you a forex calculator here. I hope you guys can see it. Look at this forex calculator now. Now let's say you have $100, okay, and you have a trade idea. Let's say you have GBP, JPY idea is launching. Just wait, it's launching. I don't know what. So when you open this calculator, you come to position size. Now, when you come to position size, let's say you are coming to GBP, JPY. Let me just say, okay, let's just use this one that is there, Euro JPY. Now, your account size is $100, right? I want you all to see how they calculate stop loss now. Your account size is $100. The risk ratio means, now, how much are you willing to risk? Now, you can either put it in percentage or you can put it in price. Look at the option in amount. If you put amount, you have to write it the amount in dollars. So let's say you want to use percentage, or let's say you are using amount now, that's $5. Do you get the point now? Let's say you want to
Yes.
put it in percentage, that is 5%. Okay, but let's use the dollars now. Now, guys, hold on, guys. So now you want to calculate your stop loss. Now, to calculate your stop loss, now the proper formula is your entry price. Hello, please,
Yes.
yes, please. So no distraction, please. Now, the calculation is your entry price minus your stop loss. That gives you the number of pips of your stop loss. Now, to make it easy, I'm going to use this. So let's just change it to, I'll change it from price to pips. So let's say your stop loss now is 5 pips, like we have seen in all those calculations we've done. Your stop loss
Yes.
is 5 pips. Now, what would be your, look at it, what would be your risk size? Sorry, your risk size will now be 0.1. Do you see the point now?
Yeah.
0.1. In fact, it's 0.14 to
Or
1.
8.
So meaning if you are taking that trade now, you are entitled to use 0.1. Now, let's now see how we now calculate your money, the amount you make. So if the profit is 10 pips, do you get my point? If the profit, are you with me? I mean, who's talking?
Yes.
Can the person mute?
Guys, please, you guys should mute yourself, please.
I mean, so now, as you can see, you look at your stop. So you choose the standard lot. Standard lot is what you use. Standard lot now is 0.14. Anytime you calculate, your result is standard lot, okay? So which means you're using
Yes.
0.14. Now, how do you now calculate your profit? So if the trade idea, you now go to peep value. If the trade idea now, GBP is Euro JPY, right? Euro JPY, okay? Your lot size now is what? Trade size means your lot size is 0.14, okay?
Yeah.
Let's just ignore the 8 now because there's no room for that, right? Let's just say
Okay.
0.14, okay? And the pips now is 13, like we saw the other time. I think we saw 13 or 12. Let's say 12. Let's even say 1 to 2, double of the stop loss. The stop loss is 5 pips. Let's say the pips is 10. What you'll be making on this trade will be what? You'll be making $9. So which means you invested $5, you are making $9. Am I right about that?
Clear.
Okay, 0.1. So you're making $9 on this particular trade. Do you get the point now? Which is 9.36. Actually, it's because of that fraction. Let me put the 8. If I put the 8, it will be more than that. It will be 9.9. That's almost like $10. That's like double of what you have put in. Do you get the point now?
Yes.
Now imagine you are following that rule of a standard, that's flat rule of 0.01 on $100. You'll be cheating yourself because here you'll be making like maybe 90 cents, not even up to $1. Do you
I
get the
get your
point?
point. Very clear.
So this is how to calculate stop loss. So stop loss. So the best way for beginners is to get this calculator, so you don't have to do the maths because some people don't even like maths. But then this will help you out. Okay. So
Okay.
I will send the link of this calculator to the group.
Excellent.
You guys will have it. I'll send it. The leaders here will send it to the group, and then you just go and download, and then I think just to learn how to use it. So
Okay, just a
one more
last question from just a last question, please. You know, you guys were giving us the overall
We don't have
position.
gown. Take.
Okay.
Hello.
I'm silent now. Let the other person ask. Yeah.
Okay. Who is asking? There's no time. I mean, want to quickly round up.
Okay. The question I want to ask is
Hello.
that,
All right.
let me ask. The question I want to ask: if, for example, Manara gives 20 signals for the day, it's not mandatory. Won't take all of them.
No.
For example. Because when you were calculating the win rate versus the loss rate, overall position, you were taking the total signals that were given. But for us going into the trade, if we achieve our target, that should be okay for us, isn't it?
Yes, that should be okay.
Okay.
Yes, because winning in forex is not a day thing; it's a long term. It's like in the long run, not long per se. 30 days is not even long. After all, when we work, we earn our salary in 30 days, right? Now, and the way the world is so fast now, before you know it will be here. So instead of, because you know why, like I said from the beginning, spending time in the market is something that is not ideal, it's not good. It's not healthy to be spending time in the market because the market is after your money. So it will be very painful to make money and lose it back, and then you go out of the market. So it's better you take what you can take per day, and you are out, and you take it like that. Market will not even notice you. Do you get the point? The market will not notice. The broker will not be able to get you. They will notice you because you just take your little, you're out. But before you know it, you're already a millionaire. But those who like to stay, they will never get to 1,000. Even when they get there, they lose the whole money the next day. Do you get the point? So
point.
don't bother yourself about taking all the trade. That one is just to show you how that's what the data will show you then. How to know a powerful, a proven, effective strategy is the bad days, not good days. It's only the bad days. What are bad days? Imagine a strategy that you have that give you after losing like 14 times and you only win 8 times out of 4, lose 14 times and you win 8 times, yet it's giving you profit over 300 or like more than 40% profit of your account. That means that strategy is very solid. So we only prove that to you that even despite all the losses, at the end of the day, within less than 1 month, with your $100, you'll still be having a profit of over 1,200 plus, despite all the losses. I mean, the losses were even more than the wins. Do you get the point? But because of the strategy, when it gives you win, it gives you like multiple. Do you get the point?
I get your point.
But then remember again, those data that you saw there that Mr. Sheriff presented were without the rules. Imagine you apply the rules, it will even reduce the wins again, which means you have more money than you saw there. Do you get
your point?
So that's that. All right, guys. I think I'll take last one from that last person. That the other person I want to say something. Please, let's just go tonight and all that. So you have last one.
Hi.
Question. All right.
Hello.
Please go. Yeah, go ahead. I'm here.
Sorry. I know they have. Sorry, guys. I know you guys have run through the keeping your money for like 30 days. I was just like in between something of which that makes me to be in and out. And I just want to ask a quick question. If possible, if not, I don't want to hold anybody down. But here's my